Good morning, everyone. Thank you for joining us. I apologize for our short delay this morning. We're experiencing a little bit of technical difficulties with things running just a little slower than they should. So fingers crossed this all goes off without a hitch. We do have some great things for you this morning. We have some power updates with Georgia, snap updates with Andy. Brandy Ritter is going to talk with us about our F312 NOMI and the things that will negate an auto closure. We're also going to revisit some of the questions from our regional expedite training that we had, and then talk about assets. So before we jump into that, though, I want to give you just a few reminders. If you are on time study right now, those time study codes are on the agenda that were mailed out to you, so you have those available to you to use. We do have a new security mentor training that is due, so make sure you log into that and that you are all up to date and caught up with those trainings. If you have any questions during the broadcast, so far it has worked best for us to compile a Q&A document and send that out to the field after we're all done. So make sure you get those questions to me and we'll get those answered for you, and we'll mail those out to everyone afterwards. I think that's it. So without further ado, we'll go ahead and we'll get started with Brandy. Thank you for joining us, Brandy.
Good morning, everybody. Thanks for having me. So just quickly, we were going to walk through the NOMI, which is the Notice of Missed Interview, the F312, and what can actually void the auto denial for the NOMI. As you know, NOMIs will actually close or deny a case as long as no notices of approval, denial, pending, or closure have been sent with the same application. So I'm not exactly sure why Val's document it's a little skewed. That blue box that says notices that void denial actually should be up in between those two arrows in the middle section for the flow chart. But we will be sending this out for you so that you have it for future reference. So essentially what happens is you register an application, whether it be a new application or a recertification application, and then you notice that the client does not come in for their interview. You send the F312, which is the NOMI, and if no other action has been taken on that case, the notice actually triggers a queue in the system to auto close that case on the 31st day. So it will mail the notice on the 30th or generate it on the 30th and mail it on the 31st. I believe that's how it works. Or maybe the 29th day and the 30th day. You'll have to talk to Andy about that. I don't remember if it's 30 or 31 days. So anyway, if nothing else happens, then the system will automatically deny that case. Should you send any other notice that is tied to that application, then that notice, if it has any verbiage in it that approves them, denies them, pins the case, or it closes for any reason, it will void that automatic closure, which means that you then need to set yourself an alert to remind yourself to send the closure or denial notice yourself. So that's the key to this, is to make sure that you look and or are aware of those notices that could actually cancel out that auto denial. An example that I have here, which unfortunately I can't share with you, we discovered that this morning, but I'll give you some general information as to what took place on these two specific cases. The first sample, the application was received on January 15th. On January 16th, closure of ABOD went out in the system. The notice of missed interview didn't go out until February 4th. So because that ABOD closure notice was tied to that 115 application and it went out before the NOMI, it still voided that denial because that specific closure notice was still tied to that application that was registered. So the key is to look at when the application was registered and what notices actually tied back to that specific application. And that will clue you in as to whether or not any of the notices would cause that denial. Another example was the February early issuance. I had a lot of questions for folks that were concerned. They had sent a notice of missed interview prior to us sending out that February early SNAP issuance notice. Because that was an informational notice, it was not an action that took place on the system. It did not void the denial. So the auto denial still worked in that instance. So that's it in a nutshell. And I, of course, am available at any time if you have any questions. If you want me to look at a case to find out if it should auto deny or not, because you're just not sure, I'd be happy to do that for you. And if you have any questions, you can let Val know, or you can email me directly personally, or you can email the dfshelp@wyo.gov. But that's all I have.
Thank you, Brandy. We appreciate it. So we will get this flow chart sent out to you, to the whole field in the email. Probably just reply to all in the same email that you received the invitation and the other documents for this video conference. So keep an eye out for that to come through to you. Okay, so we're gonna jump right ahead and welcome Georgia. Georgia, thank you.
Good morning. I hope you can hear me okay. I got my new computer set up, and you have to have laptop open or it doesn't work very well. So thanks for bearing with me during my technical difficulties. So just a couple of reminders and updates for you. The annual COLA was approved and will go into effect July 1st for the power. So the table inside the combined manual has been updated as well for you. Please remember that you must manually work all of your July cases, your July power SNAP combo cases, to make sure that the proper amounts are reflected in the grant. And any previously rolled July cases will need to be reworked as well. So keep that in mind. And then also, because the power grant may impact the SNAP amount for those combo cases, you need to make sure that you work those combo cases in time to send any notices if there's a decrease in the SNAP amount. And so lastly, we like to make sure to keep our customers informed of any changes that happen in power. So we like to send the A702, which is the increase in benefits. I think a little bit of work on the front side will probably save you a lot of work on the back side, a lot of phone calls and that sort of thing. And then lastly, do ensure that you update your narrative regarding the COLA increase, please. So any questions that you have on the COLA, please feel free to call me or chat me or me. If you have any cases that don't roll well or you have issues with, please let me know. And then the last thing I wanted to share with you today was just a reminder about the combined manual change team. So if you have suggestions or recommendations that you'd like to see in the combined manual, you can now send those to dfs-cmchanges@wyo.gov. You should include a brief summary of your request, the program that it's attached to, where you would like your changes or what section in the combined manual that you're referencing, and then sufficient justification to explain why you feel that change is warranted. And then the change committee will review that and look at how it might impact other policy, And then whatever decision is come to, those changes will be made. And then an email will be sent to the originator, letting them know what we're doing. And then we'll also share that information with the field statewide. So if you have any questions on that as well, feel free to get in touch with me. And I think that's all that I have this morning. Thanks, everyone.
Thank you, Georgia. All right. And Andy is going to join us with some SNAP updates.
Hi, good morning, everybody. I just wanted to quickly go over some changes that I'm going to be making to the combined manual later today, and I hope that there are changes that you will like. So the first is, we had a question from the field a couple weeks ago as far as allowing the child care deduction for job search. Right now, our policy says that we have to limit that deduction to only 12 hours a month up to 2 months. And the question that came from the field was, is that once per year? Is that like lifetime? You know, what is it? So I did review that with FNS, and FNS came back and said that we actually right now are just unnecessarily limiting that. So I'm going to be removing that 12 hours per month for 2 months. We don't have to put a limit on it. However, what I am asking for the field is that if something is questionable, we try to verify it. So we need to be asking in the interviews if somebody's claiming a child care cost, and we know that they're not working, they're not going to school, we need to be asking them why the kids are going to daycare. So they need to specifically say that it's for job search. I would probably allow it, for the cert period, and then if during the next certification period, if we're still getting that same answer, we need to send out something that says we need to verify it. There's going to be multiple ways that they can verify it. They can show us verification of submitted applications, or just writing us a statement, just something on hand that allows us to use that deduction. So that will be changed today in Combined Manual 907. And that's a quick change. You'll just be removing the limit. The next change, which is what I hope that the field is really going to like, Kristen and Casper had sent me a proposal a while back asking me to kind of review how we issue a certification period. The request was really to kind of pilot doing it a little bit differently. But the state office liked the proposal so much that we decided I don't feel like a pilot is necessary. I'm okay with just making that change. So right now, when we issue a certification period, we have a lot of criteria, especially like for the 4 months, where we're saying if someone is homeless, if they have no income, if they have varying income, things like that. So we're gonna lift that criteria and give you a little more discretion on how you're issuing a cert period. So in the manual, what it's actually going to change to is that I'm only going to require that you give a 4-month certification period to any household that contains an ABOD. You can use the 4-month certification period if you as a worker feel like that helps you manage your caseload better. If you feel there's a need for a 4-month certification period, such as, a change is going to occur in the household. But other than that, that's going to be the only requirement for the 4-month certification period. Same with the 5-month. That's going to be at your discretion. We're going to keep that as an option, again, in order for you to manage your caseload. And also if you know of a change that's happening, or if you just feel like a 5-month is necessary. Other than that, you are going to be able to give 6-month certification periods to any other type of household. And then the 12-month will still stay for the elderly and disabled with their income is stable. So we're lifting that kind of, I think some of the examples that we've seen are, we can't give a 6-month cert period for somebody who works 30 to 40 hours a week because we consider that, not a stable schedule. Well, if that's consistent for the client, it's a stable schedule. So we're just lifting that criteria a little bit, giving you a little more discretion, not taking away any certification periods. You can use them as much as you like or don't like, just make sure that whatever you're choosing, that you're documenting that thoroughly on why you did something specifically, if it seems like it's kind of out of the norm. And then the last thing I just wanted to quickly go over, which is not a change in the manual, it's just to kind of direct you to the manual to 1313. We are seeing some instances across the state of requests for replacement benefits due to flooding. And so it's a quick little process. It's in Combined Manual 1313. I sent that out to the supervisors last week. So I don't know if they've had a chance to go over it with the fields, but if you're getting those requests, please follow what's in the manual there and let me know if you have any questions. And I think that is all I have today.
All right, thank you, Andy. We appreciate it. Okay, so I wanted to go over the regional expedite training and specifically the quiz that we had. It seemed like quite a few struggles with this quiz. So I'm going to go through them with 20 questions. We'll kind of zip through them really quick and just hit some of the high points. But I really want to encourage you in the field to use the tools that are available to you. We see updates happening all the time. We just talked about several updates that happen, changes to policy and the way we look at things. So the idea that you as a worker will have every action that you need to take in every situation memorized is really unreasonable. What we really need to work on is utilizing the tools that we have in order to find the answers and current policy and current procedures that we'll be doing. So when we do send out these quizzes, and we'll be doing a lot more regional trainings with you that also have the quizzes attached to them. Please, use the PowerPoints that are given, the manual to kind of search those answers and find them. I think that we'll have a lot more success with those if we really start referencing those items that we have available to us. And I know at this time, it can be a little difficult to kind of search those tools out and find them unless you're already in it. So we are also working on a plan to make sure that we have all of that housed in one central location for you to make it easier to find what it is that you're looking for, so it doesn't take away from that casework time that you have, because we know everyone is busy and your time is very valuable. So we want to make this as easy a process as possible, and that's all in the works for you. Okay, I'm going to go ahead and screen share. Bear with me for just a moment because everything is running a little slow today for me. Oh, hey, that popped right up. So made a liar right out of me there. So, all right. So first question on that quiz was, federal policy requires that applicants eligible for expedited SNAP benefits receive their benefits in how many calendar days? And the answer to that one is 7. I think we all did great with that. Next, true or false, applications are only screened for expedite service when it is requested by the client. That answer is false. We do screen all applications as they come through for expedite eligibility. You guys all did great with that as well. All right, so here, are assistance units eligible for expedited SNAP benefits when they already received benefits in the month of application? We had a little bit of a struggle with this one. The answer to that question is no, they are not. If an application comes through to us today and income and assets would qualify them for expedite benefits, but they've already received their June benefits here, we're going to schedule it as a regular recert. That would be considered a timely recertification for the month of July for them. So the answer to that is no, they are not eligible for expedite. Okay. Now this one, and I guess it's probably good that we kind of go through this just so that you know how these quizzes are set up. When you see check all that apply here, that means you're going to choose most likely more than one option. And I think that's where we had some issues with this one. An applicant is eligible for expedited services when check all that apply. We had quite a few people only mark one. They have less than $150 gross income and their liquid assets are below $100. And that's accurate. they are eligible for expedite services when that occurs, but they're also eligible if their total income and assets are less than their rent and mortgage plus allowable utilities. So we needed to check both boxes on that one. And that is going to be your clue that it's more than one answer there that we need to be choosing. All right, what section in the combined manual talks about expedited benefits? Section 405. When should an expedite eligible application be scheduled for an appointment? This was an open question, a short answer question. I think everyone did pretty good with this. We just, we had some different ways of wording the same thing, which is great. So expedite eligible applications should be scheduled same day or the next day. We want to get them in right away so we can meet that 7-day criteria for their benefits. All right, which of the following deductions can be used to determine expedite eligibility? The correct answer to that is the utility only standard, the standard utility deduction, and the telephone only allowance. I threw a couple of curveballs in there, and other multiple choice questions were, answers were the medical deduction of $138. I actually had 6 people choose that one. We cannot use the medical deduction when determining expedite eligibility for scheduling the expedite appointment. So, and it's not one of the options listed on the front page of the application either when we're looking at that expedite box. So these are the 3 correct answers: utility only, standard utility, and telephone. All right, what is the utility deduction for an applicant who pays for their heat, cooling, and/or has received LEAP in the past 12 months? That would be our standard utility deduction of $393. We had a couple of wrong answers on that one. Make sure we're just double checking things. I think that's just trying to zip through here, and you see, the utility only allowance, and think that you're hitting standard utility when you're not. So. All right, next, which items are necessary for an application to be considered complete? Name, address, and signature. That's all we need for it to be complete, meaning that is all we need to schedule that appointment. When we do the actual interview, we will go through the remainder of that application. We will verify what it is that we need to verify, or in this case, with expedites, we will take client statement and then postpone that verification. So it doesn't mean we have everything we need to process it, but we do have everything we need to consider it a viable application to schedule an appointment and to have to take action on that app. All right, is there a lifetime limit to how many times an assistance unit can be expedited? No, there certainly isn't. We do have some criteria on if they can be expedited at the next application. Did they bring in all of their postponed verifications, or have they been processed under normal processing standards in the meantime? But as far as a lifetime limit, such as our power lifetime limit of 5 years, we do not have that for expedite benefits. Okay. All right, so we struggled with some of these, and I'm not going to go through each one individually, but I do want to talk about that on or before the 15th and after the 15th for when applications come in. We had quite a bit of struggles with that part of the quiz, and I'm not sure if it was just misinterpreting the question or if it's truly misunderstanding of the policy. So let's talk about it. If an application comes in on the 1st through the 15th, so on the 15th, 5:00 p.m. 15th, for expedite benefits, and they are expedite eligible, we process them as expedite, they are going to receive the month of application only as their expedite month, and they will need to bring their postponed verifications back by the last day of that same month in order for their benefits to be extended through the remainder of their most likely 4-month certification period. But we just had some changes to that. So 1st, 2nd, 3rd, 4th, all the way through 5:00 p.m. on the 15th, month of application only for their expedite postponed verifications due back by the last day of that same month. If the application comes in on the 16th through the last day of the month, now we're looking at doing that partial month benefit plus the second month's benefit as their expedite period, with any postponed verifications due back by the last day of that second month. So we did have some confusion on that. If you have questions about that, please talk with your supervisor, talk with me, talk with Andy, send that out, and we will get that worked out for you, because that's a very important piece of our expedite policy. The other issue that we saw with this quiz was how those benefits are issued. When we're doing the expedite period, that's going to be an immediate issuance. We want to get those benefits to our clients as soon as possible because they're eligible for expedite. That's the whole purpose behind expedite procedures, right? So we want to do those immediate issuances. So if their application comes in the 1st through 5 p.m. on the 15th, we want to do an immediate issuance for that initial month application. If it's on the 16th or after, we're going to do an immediate issuance for both of those expedites, the partial first month of application and the second month of application will be immediate issuance for both of those, and they're going to get them at the same time. We don't do regular benefit issuances until we roll it through when they've brought in their postponed verifications and we're extending their certification period. So the expedite months will actually be the immediate issuance months. And I always like to tell workers, make sure you're having a conversation in the office with our clients when they do bring their application in on the 16th or after, and they will be receiving one and a partial month benefits, because we want to let them know that they will not be eligible for another load until that 3rd month. That is all in our notice, but we want to make sure that we're informing them of that in more than one way. So make sure you're letting them know, hey, you're going to get, your partial June benefit plus July's benefit at one time. You will not be eligible for another load until the beginning of August if you've brought back these postponed verifications. That just lets them know that they need to really budget those food dollars and make it last. It will also save you some time in the 1st week of July from getting those phone calls saying, hey, I didn't get a load on my card today, and then you have to look and say, oh, well, because you already got it with your partial June benefit. So just a little bit of proactiveness goes a long way with our client communication. So I did see a lot of struggles with those dates. If you still have questions, please let me know on that. Okay. So this is all very much the same. We have an expedite app on March 11th, so it's on or before the 15th. When will their expedite authorization period be? It will be through the end of March, that initial month of application, and they have to have their postponed verifications back by March 31st in order to receive the remainder of their certification period. For the calculations, everyone did pretty good with those, calculating if they are expedite eligible or not. Do they have less than $150 in income and less than $100 assets, or do their income and assets equal less than their expenses? Everyone did really well with those. All right, who do we require ID for an assistance unit? Pretty much everyone chose PI. It is the PI and authorized representative. So everyone had the PI correctly. We just had a few people that missed the authorized representative as well, if there is an authorized representative in that case. And that was all talked about in that PowerPoint. All right, who do we require Social Security numbers for? We do require Social Security numbers for everyone in the assistance unit. For SNAP, we do not require verification of those Social Security numbers, just client statement, but we do have to have a social if they're going to participate in that assistance unit. All right. This is that, how are we authorizing benefits if their application comes in on or before the 15th or after the 15th? So if it is on or before the 15th, we're going to do the month of application only with an immediate issuance. If it comes in after the 15th, so the 16th or later, it will be the month of application and the following month with an immediate issuance. All right, an application for SNAP benefits is submitted. They state they have 0 in earned and unearned income, 75 in savings and pay, no rent or utilities. Are they expedite eligible? We had a few people miss this one. They are expedite eligible in this case. They have less than $150 in income and less than $100 in saving or in liquid assets, period. So yes, they are expedite eligible at step 1. All right, we had a lot of, everyone did really good. I mean, we had 102 out of 104 responses got this one correct too. So the calculations don't seem to be posing a problem for anyone. So doing great with that. And I'm not sure. And again, with the expedite certification period, figuring that out, we had some struggles there, as you can see. Application is submitted for SNAP benefits on May 15th. The assistance unit must submit a DFS 106 employer statement, which verifies their terminated employment, date of final paycheck, and gross wages. The information is postponed for expedite processing. What is the expedite certification period? We need to know when that app came in. It came in on the 15th. So it's going to be that month of application only, May 15th through May 31st. If it came in on the 15th, it's month of app only for their expedite certification period. And then they have to have all of their postponed verifications back by May 31st. All right, so that is the recap of our regional expedite training. I really hope that that was helpful for everyone. Like I said, if you have any further questions, let me know and we will get that all lined out for you. All right, we're gonna jump into assets. Perhaps. It was all loaded before we started, so hang tight. I feel like I should have the Jeopardy theme song playing while my computer thinks. Did it load? There we go. Okay, we're back in business. All right, so assets are all in the 800 section of the combined manual. When we did the combined manual training regionally, we talked a lot about getting to know the sections and how things are grouped, and that makes quick reference so much easier so that you're not, you know, taking up half a day searching for an answer. So definitely keep working with that combined manual and getting to know those sections so you know exactly where to go, you know, for your first stop. And then you might have to do a little bit more research, as, you know, a few more times, but at least you have an idea of where you're headed. So 800 sections for assets, 800 through 807. All right, so what do you need to know when we're talking about assets? You need to know what kind of assets that you're asking about in the interview. The interview is very important. We do have that interview toolkit, which has some guidance on a few of the questions that you need to ask. What is the countable asset limit for the SNAP program? What is the countable asset limit for the POWER program? What assets are exempt for each of those programs? It's different for SNAP versus POWER. And what verifications do you need to request regarding assets? All right, so we have 3 different types of assets that we talk about. Liquid resources, which also are entered into the LEAR screen. So when we're looking at liquid resources, we know we're putting those onto LEAR. Those items include, but are not completely limited to, checking accounts, savings accounts, certificate of deposits, and money market accounts. The liquid resources are things that are readily available and easily converted to cash. You can walk into the bank, you can withdraw funds, and you can walk right back out with cash, usually that same day. Other assets, which are the items that we'll put into the Otis screen on Epics, include things that are not so easily converted to cash. You have to appraise them, list them for sale, wait for them to sell, that kind of thing. So we have homes, land, campers. These are not motorized campers. They're the tow behind, trailer, fifth wheel, bumper pull campers. Real property, life insurance, and flatbed enclosed or other trailers. So those are not easily converted to cash. We also have vehicles, which are entered into the VHI screen. That's going to be anything that's motorized. We have automobiles, motorcycles, boats, ATVs, and recreational vehicles or RVs. So they're used for transportation purposes. They'll get you from point A to point B. Whether that point A and point B is on land or water, they're getting you somewhere with a motor. All right, so we need to determine during our interview the ownership and availability and accessibility of each asset. So we will assume ownership and availability when the asset is owned solely by the applicant. They own it. It's available to them. They have full accessibility to it. If there is more than one owner and the other owner is not a client, we'll consider it to be owned by our client, owned and available. If the applicant or recipient can withdraw funds, sell the asset, or dispose of the asset in any way, it's theirs. If the asset is owned by more than one person, but they can access the asset or a portion of that asset without the consent of the co-owner. So they have the availability to go in and access all or a portion of this asset on their own without waiting for someone else to sign off. We'll consider it to be owned, available, and accessible to our client. All right. We will consider it to be unavailable when the asset is co-owned with a non-applicant and the asset document, such as the signature card, requires more than one signature in order to withdraw or access all or part of that asset, and the other owner refuses to sign. If the other owner refuses to sign, they're not able to get into it, right? So it would be unavailable to them. If the applicant is residing in a shelter for battered women and children, if that asset is jointly owned by a member of the former household and access to the asset is dependent upon the agreement of the joint owner who continues to reside in that former household, we will consider it unavailable. We are not going to ask residents of shelters for battered women and children to have contact with a household that they are currently being sheltered from in order to get a bank statement or something like that for us. All right, if there's a lien against a non-liquid asset for the purpose of a small business loan prohibiting the applicant or recipient from selling it, they can't sell it. It's really no good to them as far as an asset goes at that moment in obtaining cash. Or if the applicant or recipient's share would produce an estimated return of no more than $1,500, that does not apply to any financial items such as stocks, bonds, and negotiable financial instruments. All of those items would be considered unavailable. All right, any assets which are jointly owned by separate households are available in their entirety to each household unless it can be demonstrated by the applicant that the assets are inaccessible to the household. So when the household can verify that it has access to only a portion of the asset, the value of that portion is what would be counted towards the household asset level. So we would need to verify what portion they have access to and use just that portion. When the asset cannot be practically subdivided and the household's access to the value of the asset is dependent on the agreement of a joint owner who is refusing to comply, we'll consider it totally inaccessible. So if we can't, if it's not, you know, you have 30% and this person has 30% and this person has 33%, if we can't actually subdivide it, and if our client is not able to access it without the consent of other owners who are not a part of this assistance unit, then we would consider it totally inaccessible to them. All right, so how do we determine the countable asset limit when we're looking at each individual asset? We will use the cash, trade-in, or fair market value. We will subtract any loan, legal encumbrance that they have against that asset, and that determines our equity value exempt asset. And it's that equity value that we will use, that we will put into EPICS, and that we will narrate. Make sure you're narrating all of these calculations here and documenting all of that in the narrative. All right, when the determined asset causes ineligibility and our client disputes the value of the asset, they have the option to obtain 2 appraisals from knowledgeable sources to verify value of it. I've used this mostly with things like campers. You know, you look up the value and it says that a certain camper is worth $8,000. However, you know, maybe last season, the water tank broke and needs replaced and the furnace went out and the roof is now leaking because who knows, there was a lightning storm and a tree branch fell on the roof. So that, you know, 2010 camper is not worth what we're pulling up. And so the client has the option to say, you know, it's really not worth that. It needs all of these repairs. At this point, I couldn't sell that camper for $1,500. Okay, they have the option to go ahead and get 2 appraisals from knowledgeable sources to take it to a place that sells campers where they might be able to trade it in, and then come back to us with those, and we can adjust that countable asset equity value for them. All right, so when we're looking at liquid resources, we're gonna start looking at liquid and then the other assets and vehicles each separately here. So liquid resources, request the most current account statement within 30 days of the application date. It does need to be current. Statements should preferably contain account holder's name and account number. Okay, we've had some confusion and questions come through recently regarding what is acceptable verification for bank accounts. Just to let you know, we are still working on a verification training that we'll be doing regionally on is this acceptable verification and is it not? And we'll look at that for everything from assets, expenses, all of that. So that's coming up. So our clarification for this right now for you is preferably we should have the account holder's name, the bank name, the account number on that statement. We need to be able to reasonably determine that our client owns this account. At the next certification period, we should be able to reasonably match the new statement to the old statement that it's the same account, that we don't have a new checking account hanging out there or something that we haven't previously verified. So it's about being able to connect the dots. If you are reasonably able to connect those dots, then we can use it and then just make sure that you document that in the narrative really well. So it's not a hard and fast checklist of, you know, it has to have this, 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 and that. And if we're missing one of these items, we cannot accept this verification. That's not the situation. It's about that critical thinking piece. Can we reasonably establish ownership of this verification? And can we reasonably establish later that this verification matches the new one that comes in? Statements do, however, have to include dates and balances. We have to make sure it's within 30 days and we have to know what the balance is. All right, then deduct from the account balance any direct deposit income received in that month when determining countable asset amount. If you have a history and you can see there's direct deposit amounts there, you know, we can deduct that. We're not going to count the same dollar amount as income and asset in the same month. So make sure we're making those calculations. And then deduct any outstanding checks as well from the account balance when determining countable asset amount. Do we have to do that every time? If they're under the resource limit with the balance that we have, no. These are ways that we can for them. So deduct that direct deposit and deduct any outstanding checks. Okay, question everything. Is the account jointly owned? Is there another owner for this account? What are the deposits from? If you have a history that was submitted to you, we don't have to have the history, right? But if it is submitted to you, all of the information on that history is now known to agency, which means you have to look at it and you have to address it. And if there are deposits on there that are out of the norm for that unit or that are normal by, you know, paycheck dates and deposits, we need to be questioning those and we need to be narrating the answers. And if the answers require any further, yeah, I do have a side job, I just didn't know I needed to report that to you, then we need to narrate the follow-up that we're making on that. Are we requesting new verification for this new information that we have? Are there outstanding checks? That balance is high. Are there outstanding checks? You know, are you waiting for your rent check to go through? That kind of thing. And are there transfers to and from other unreported accounts? Please address those when you see them, because they can be another unreported account that that individual owns. And if so, we need to then request a bank statement for that account as well. However, if it's a family member's account and I borrowed $50 to make it until payday, my mom just called the bank and transferred that from her account to mine, we can just narrate that situation. But we need to document that we saw it, that we questioned it, and what the answer was, because it is known to agency if it's on verification that has been submitted to us. All right, so some examples of those, and these are real bank statements that came through for real cases and things that were not caught with those histories. So this case, client has unemployment benefits, states that's the only income that they have. We can very clearly see Wyoming unemployment benefit deposit here. Perfect. But we also have a few other unexplained deposits listed. So we have a deposit, and the blue circle's a little wonky. Kind of had a hard time making everything fit there, but our deposit here for 105. We also have a QuickBooks deposit listed and a PayPal transfer listed. So 3 different deposits that are not explained by the only source of income that we know of for this assistance unit. We need to ask about those. What is this $105 deposit? It could be something like I loaned my cousin money and they paid me back, or I loaned my friend money and they paid me back, or whatever the situation is. Something that we don't really need to follow up on, but we do need to narrate it. QuickBooks, what is that? Generally speaking, QuickBooks is used for self-employed individuals. So is that a clue? Is that a red flag that we might have some self-employment income happening in this situation? It could also be that with the PayPal. If things are being sold online and people are buying it through PayPal, that PayPal deposit is being made for our client. It could also be a return of an item that they purchased online through PayPal. Or it could be that a friend or family member has loaned them money, but they live far away, so they transferred it through PayPal. I mean, there are lots of explanations that could cover this, but we need to make sure that we ask about it. We know what that explanation is and that it is something that we don't have to follow up on and then put that in the narrative. Okay, this one, the red flag or the clue that you're seeing here is that this individual only has VA disability income of a little over $1,200 a month. That's their only income. Yet when we look at this bank statement, we have 3 deposits totaling $2,200.27. That's over $900 difference between what we know to be their income and what they actually had come into their bank account that month. Where did that $949 come from? We need to be asking about that. And we need to be explaining it and probably following up on something. So make sure you're paying attention to those clues and those red flags when you see them. All right, here's another one. This individual stated they did not have a bank account during the interview. Therefore, we did not request a bank account statement. However, when we received their paycheck, it states that their net income is being direct deposited into a checking account ending in 3446 or whatever. So pay attention to that on the pay stubs too. That can be a clue for unreported bank accounts. Is it possible that this employer refuses to write paper checks and so employees who do not have bank accounts have to get a prepaid debit card that their net income is deposited onto? Absolutely. My daughter had that situation when she was working for a fast food restaurant. Is it possible that that is what that is? Absolutely. But we don't know that unless we ask, right? We can't make assumptions. We know a lot of possibilities, but we can't make assumptions on those. We have to ask about it. And potentially it is a checking account that this individual is like, oh, I only used it when my income was direct deposited and then I pulled that out. I don't actually have a debit card. I don't utilize it, so I didn't think about it. Okay, well, we still have to have a bank statement for that. So it's all about having those conversations and following up on things, not making assumptions, and instead asking the right questions. Okay, moving on to other assets. Questions to ask. Is the home, mobile home, or camper the applicant's residence? What is the fair market value of the asset? Is there a lien on the asset? How much does the applicant or recipient owe on the asset? Is the asset an income producing asset? And is there a bona fide effort to sell at a reasonable price any real property such as land, building, or unoccupied house as verified by proof of listing? All right, other questions to ask. Does the applicant intend to return to an unoccupied home when they have left temporarily due to employment, training for future employment, illness, or is the home uninhabitable due to casualty or natural disaster? Does the client plan to build a home on a non-exempt land lot when they do not own and are not buying another home? And is ownership of this asset shared with other individuals? These are all lined out for you in that combined manual. Get to know Combined Manual 806 for treatment of assets. Once you know what kind of asset it is, once you know what the equity value of that asset is, reference this section. It's going to talk about each asset and how we treat it, and then also what our SNAP coding is and what our power coding is. So make sure we're referencing that. Make sure we're using the correct codes. We've seen a few errors where the incorrect code was put in. So, you know, a camper home that is used as a primary residence was actually put in as just a camper home. So the value of that camper home counted against the asset limit, which then put the assistance unit over assets and application denied. I'm not sure if that's the exact situation, but that's a potential situation when we're using the wrong coding that could really be catastrophic to the processing of that application. So if the camper home is used as a residence, we need to make sure we're using the correct code for that, because that's our communication to Epics. That tells Epics how to treat that value amount. Are we exempting it, or are we counting it against the asset limit? So reference the combined manual, double check your codes. Don't just assume that you know the code because it's the, it's the first thing that pops in when you think of camper homes and you put the right, that code in. Make sure we're referencing those things. All right. Okay, how do we treat vehicles? It is different between the two programs. For SNAP, we exempt all licensed and unlicensed vehicles used for transportation. It can include those boats, even though we live in landlocked Wyoming. Has a motor, it gets you from point A to point B. We can exempt it. ATVs, four-wheelers, motorcycles, RV campers, the Winnebagos, we can exempt all of those as they are used for transportation. All right, it can even include vehicles that are broken down as long as our client states that they would use it for transportation if it were running. Power, it's different. We can exempt 2 registered and licensed vehicles. That's important. We want to double check the RIS and the licensing for those vehicles. So 2 registered and licensed vehicles per assistance unit. We want to use the equity value of all of the vehicles. We want to choose, or Epics will also choose, the 2 vehicles with the highest equity value and completely exempt those from the application. The remainder of the vehicles will then count towards the asset limit. So even though we're exempting 2 registered and licensed vehicles, we still need to put those into Epics. We still need to find out the fair market value. We need to list them on the VHI screen in Epics, and then Epics will take it from there and exempt the 2 highest ones. And then you will narrate that, document it really, really well in your narrative. Just like for SNAP, even though the vehicles, motorized vehicles are exempted, we still list them on VHI in Epics. So make sure we're following it through all the way. All right, what are the asset limits? Our current asset limits for SNAP, for regular households, it's $2,250. For elderly and disabled households, it is $3,250. For power, our asset limit is $5,000. So we have a little more leeway there. And remember that power, tribal TANF, and SSI recipients are considered asset eligible. They're categorically asset eligible. And that can all be referenced in 502 of the combined manual. All right, so acceptable verification and evidence. What can we accept? Combined manual 303 lines that out. So for bank accounts, CDs, bond stocks, mutual funds, we're looking for bank officials, bank statements, certificates of deposits, viewing certificates, bonds, or notes. Make sure they are current and make sure that they reasonably establish ownership of that account. And then we also can double check to make sure that that date is current and what the balance is. So utilize the manual when looking at what is acceptable for our assets. All right, again with the codes, what are the correct codes? When we are looking at, let's see. Here we go. I'm going to stick with that camper trailer used as a home and camper trailer not used as a home in the 2 different codes that we have, because it means that Epics is going to treat that case in 2 completely different ways. So if we have a camper trailer not used as a home, right above my little red cursor here, you can see that you're going to enter that into the Otis screen. So this section of the manual tells you what screen you're putting it on. It also tells you that for SNAP, the code is CP. For power, the code is CP. That code, CP, is going to tell Epics to count the equity value of that camper trailer against the asset limit that we just looked at, which means it could potentially put them over assets. If that camper trailer is used as their home, it's their primary residence, it is now an exempted primary residence, right? We're still putting it on the Otis screen, but now our code, our communication with Epics changes. Our code is CH for SNAP and CH for Power. That will communicate to Epics that the equity value, whether it's $5,000, $60,000, $100,000, is exempted. It will not be counted against that asset limit. So it's not going to potentially cause ineligibility for the SNAP or the Power program because it's an exempted home. So that's a great example of, please don't make assumptions that you know off the top of your head exactly what the code is that you're using. Reference the manual and make sure we're using the correct code, because communication is key with our clients and with Epics. All right, so let's take a look at some of those screens. Lear and Epics. If we're entering checking account, we're gonna put the bank name and the last 4 or 5 digits of the account number so that we can differentiate between the accounts, match them to the statements that are in the file. If it's joint owned, we put that Y there. Make sure we're using the correct account codes, PC for personal checking, and then the person number, that gets pulled from their SEPA number. So who owns this? Since this is a joint account, it is owned by Peter Quill and Gamora, person 1 and person 2. Put in the value of that account, what's in there, and the verification code. Do we have hard copy or client statement? If there are other accounts, same thing. Bank name, portion of the account number so we can differentiate one from the other. If there were another US bank account, we need to be able to know which is which. The account code on this one is savings. The person number is Gamora, she's the owner of this one, and the balance and our verification code. When we're looking at Otis, those codes are very important. So Peter, we have home. That's our code. HO is the code for the owner occupied home. That's going to tell Epics that this $250,000, well, the $25,000 equity value is not going to count against their asset limit. It will be exempted because it's the owner occupied code for them. And then the verification code. So we're gonna put in the market value. We're gonna do our calculations, subtract what they owe from that, come up with our equity value, enter that, and then the hard copy code. Gamora also has a camper. This camper is not used as a home, so it will count against their asset limit. So we go to the manual, we double check our codes in that table, and we find that it's CP. Market value is $7,000, however, they still owe $6,500 on it. So our equity value is $500, hard copy verification. Vehicles, we do have to put them in even when they're exempt, both for SNAP and Power. We have to list them on Epics. So we have the type, truck, it's a Ford F-150, years 2012. Again, pulling from the SEPA person number. Peter is the owner of the truck, fair market value $17,500. Amount owed, still owes $15,000, hard copy. We'll put Gamora's car in, car GMC Acadia, 2012, her person number is 02. Fair market value of that car is $18,000. Amount owed is $16,200, and the verification code. Epics will automatically exempt these, the equity value, the difference between these two numbers will be exempted from the SNAP program because they're motorized. If we had more than one vehicle listed here, Epics would automatically exempt the 2 with the highest equity value and count the others against the asset limit. All right, transfer of an asset. Just gonna briefly touch over this. It's something that comes up not very often. So when it does, we really wanna reference the manual and kind of work as a team on it. So we don't want to spend too much time trying to memorize this. Just please know where to go in policy to find that information, and then we'll work together on it. Households which have transferred assets in the 3-month period prior to application knowingly and for the purpose of qualifying for SNAP benefits. That's the key there. Knowingly and for the purpose of qualifying for SNAP benefits shall be disqualified from participation in the program for up to 1 year from the date of discovery of transfer. For power, they shall be subject to a transfer penalty period for a transfer of a non-exempt asset for less than fair market value, which occurred within 3 months prior to application. Combined Manual 803 talked about exemptions from transfer penalties, such as settlement of legally enforceable debt, an asset sold, transferred to trader at fair market value, and transfers between members of the same assistance unit. So that asset would still count towards the assistance unit, which means that it's not knowingly and for the purpose of qualifying for benefits, right? So those are some exemptions. Very often you'll see if someone has perhaps lost a job that they will sell off some assets to make ends meet between losing the job and when they come in to apply for benefits. Did they knowingly and for the purpose of qualifying for benefits sell that asset? No, they didn't. They were making ends meet. They used the funds that they received from selling or trading that asset to live on. That's completely acceptable. So we want to make sure that there's something going on there that isn't quite right, and that we're making those transfers to trying to get around policy so that they're eligible for benefits. That's what we're looking for with the red flags. If it is determined that that's what's going on, or that is what has happened, then you want to check Combined Manual 804 for information on how to determine the transfer penalty periods. Work with your supervisors on that. Work with Andy or myself or Georgia as well. All right. Broken record, but I can't tell you how important it is. Narrate, narrate, narrate. Clearly and thoroughly narrate that you have addressed all the assets. When we get the histories on the bank statements and it becomes known to agency and you see deposits that don't line up with the income that we're aware of, we need to narrate that we caught it and that we addressed it, what the answers were. And if we needed follow-up, we need to narrate what the follow-up actions were. Make sure you narrate all of the questions that you've asked, any inconsistencies that you see, and actions taken. So question, response, any verification requested and used, why you used it, why you didn't, why was it acceptable or not acceptable, and then any reason and action taken or not taken. All right. If you have questions, I have not heard my instant message dinging. So, if so, we will put together the Q&A for you. And that applies to anything that we've talked about during today's conference. If you have questions about the NOMI auto closures and those procedures, we'll get those answered for you as well. If you have questions about the new updates in the Combined Manual, or how to determine an appropriate certification period, please get those to me and we'll get those answered, as well as the expedite stuff and the asset things. So thank you very much for joining us today and bearing with our little bit of a lag in our computers, and we'll see you soon. Have a great day. Thank you.